Hi, this is Sive Morten with the daily update on EUR+. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, let's take a look again on the Forex markets. Today let's consider the situation on euro currency on the cable briefly. So recent statistics that we've gotten this week, mostly I'm speaking about the retail sales data and recent Fed minutes protocol that we've got, well, in general confirms our long-term view. So in the protocol we see two major points. We'll talk about this in detail in a weekly report as usual, but just for now it's worth it to mention that in general Fed said that major impact on the rate change is not yet on the markets, so it's yet to come. And the second, that they expect rising unemployment in the second half of 2022. So that's what we talked about, because previously within the recent few weeks we already showed you the employment market statistics excluding the non-farm payrolls, but initial claims, some company programs on the contraction on the employees, all this stuff sooner or later but should make impact on the employment market. And currently Fed officially have confirmed that these changes should start to appear in the second half of the year. This is of course very difficult to call it as a positive issues, but at the same time so expectation on the rate change still stands relatively high. So from the 0.5% in September with the 60% probability to maybe 75 points as well. So depending what the data we will get on inflation as well. So we'll see. In general, overall policy of the Fed remains relatively aggressive. So on retail sales, as we said, we haven't expected big drop. It's just because people in the United States currently actively compensate the drop in the wealth by the taking the consumer loans. And if you'll take a look at the statistics, we will show you this also in the weekly report. It's currently the consumer loans on the credit cards stands at an all-time high. So investors just losing the wealth and borrow money while they are relatively cheap, trying to compensate hold the same consumption level. So that's why retail sales mostly stands at the same degree, but you already understand some problems with that. It's because it can't last forever. So if people already do not have the money to consume at the same levels, the loans is not infinite, and sooner rather than later, but this will make an impact on retail sales as well and gross domestic product also. So from that standpoint, this of course create not really good background on the markets right now. On the euro currency, it's additional information and different statistics that's also not very positive. And performance euro stands relatively weak. So yesterday we said that we haven't got the grabber. This market just turned trends to the bearish. Yesterday we said that we intend to keep an eye on the double repo, but as you could see, this is definitely not the way how double repo should develop. By letter we have close below, close above, close below, potential confirmation of the double repo, attempt to go higher, and failure. So market close below 3x3 again. This is not yet the failure theoretically by the Judd Napoli framework, just because market has to break the 618 support between the bottom and the top to confirm the failure. But I would say that with the performance here, this is not the way how double repo should perform. Double repo at the fast capitulation of the bears in current situation, where it should lead to significant thrusting action. We do not have it. This mostly reminds the consolidation in shape of the ABCD. And that makes me think that we should get downside breakout and taking out of these lows in tomorrow's session. So maybe later response will come. Maybe some other pattern will be formed here that could trigger still the pullback, because market still stands above the support. So you can see that we have 101 area. Currently double repo probably will not be formed. And here we have actually got a steeple to sell for position taking, but potentially it might be something like this one. So right, so for instance, maybe a shoulder, head, another shoulder, maybe some pullback still could happen. So chances are not lost yet. We need to keep an eye on the response on this level and see if you have the bullish view or you would like to take the long position. You could consider some different patterns that might be formed in this area, but do not make any bet on the double repo, because this is not the way how, not the proper way how double repo should develop. So for the bears, you could consider probably for scalp if you would like to take the short position on intraday charts using this pattern that place somewhere above the resistance, anticipation of the downward action, or use stop orders for a breakout of this level. If market will fail to form here something valuable, market just will break the 618 level, and it will mean that we are going down, taking out of this loss. So it means that this pullback that we've got is over already. Currently, we are coming to important points. The same story approximately on the cable. So if you remember, on the cable, we're watching for this free drive, head and shoulders as well, but the performance here is not very inspiring, especially in recent statistics in the United Kingdom concerning the inflation and real wages change. So it's not only, also not very positive. That's why I think that we could keep an eye on something of that sort. So remember, we are talking about this ABCD pattern. Market could form here. So butterfly, for instance, to complete agreement support is around 1963. And if you would like to take the position here, you could try to do this based on this butterfly, probably with the stops below 1618 extension. But do not mirror this position. If even pullback here will happen, I'm not sure that it will lead to proper action of the head and shoulders. For me, the performance of the right arm, how general market behaves here, well, not very inspiring for taking the long position on the daily chart, in terms that market really could show this really big upper continuation. Currently, chances are melting fast that this will happen, because on the weekly chart, response to the XOP, as you can see, well, looks not as it should be. So already talked about this as well. And that's why here I'm not excluded that we could get the butterfly here, maybe also the head and shoulders. The butterfly could become the part of the head and shoulders, the same way as I shown you on euro currency. But probably this will be only tactical short-term pullback here. Hardly will get really upward significant action here right now. So that's actually what we have on the Forex market. Besides, as if you're watching our gold market analysis, you know that in the gold market we have the bearish grabber on the weekly chart that's suggesting the taking out of these recent lows on the gold market, so right there. And with the background to this on the gold market, definitely it has a relation to dollar value. So it puts a shadow on the perspective as euro currency as a cable in a medium-term perspective of the few weeks, probably, guys. So that's another reason, this cross-market analysis, why I'm not really inspiring, considering taking the, well, some bullish patterns, bullish context on Forex market as well.